You know, I have a lot of crackpot theories that my staff lets me espouse here. One of the things I think is happening now when we follow these earnings isn't so much whether the numbers match, but whether those companies that really can gauge what consumers are doing match with the hope that consumers don't give up buying stuff. And when in the case of Netflix and streaming stuff, we're going to get Netflix's numbers after the closing bell today. It's how many additional people they have, how many additional customers they have, people additionally streaming that will be the focus. And we've seen that out of companies even as diverse as United Airlines. How many more are flying? What's going on there? What's happening on the retail front? How many more are still going to stores and packing restaurants and all that? In other words, this consumer demand and whether he or she is still up to continue the buying spree that has been really the wind at the back of this bull market continues. Michelle Schneider knows a thing or two about all of this, the marketgauge chief strategist. And Michelle, that was kind of the gist of what I'm talking about here. The strength of the consumer, in a way reflected in the strength of some of these subscriber numbers from Netflix. What do you think?
Well, what's so interesting about Netflix is, first of all, it's up about 25%, well outperforming the S&P 500 this year, and currently at about 35 to 36 times its earnings, and it has been known to go up as much as 65 times its earnings. So the question is, with these lofty expectations of adding anywhere between 4.9 to 6 million new subscribers, with revenues at 9.26 million. Options volatility moves looking at an 8% one way or another move after the earnings. What can happen from here? And so Netflix has been growing, but not like COVID time growing in terms of their numbers. Yeah, and their ad tier model really is something that has added about 30-40% of the new subs. But the question is, can they really put them into either the ad model, which is at about $5, $6 a month, or get them into a full subscription, which is about $15, $16. So I think that that's going to be how much more can they add, and that's really going to depend on what kind of market share can they get from here. They're trying this whole thing now with sports, just like HBO did years ago with boxing. They're going into wrestling.
And people, that's not an urgent or must-have purchase if you think about it. Now, for some sports fans, rabid and otherwise, it most certainly is, Michelle, and I get that. But when things slow down, they're among the first purchases you consider dialing back or canceling. Do you think the economy at this stage, especially now with these inflationary concerns and everything else, where is the consumer?
Well, I definitely, in fact, we just saw this morning that L'Oreal had very big earnings, and that boosted a lot of the beauty stocks. And so I've been sort of thinking that really what we're starting to see is last year was sort of an all about we kind of consumer sentiment, going out, traveling, and this year it's been more all about me. So the question is, where does something like Netflix fit in? And for me personally, I have been frustrated at times with the content. They've certainly reduced the money they're spending on content, and it reflects in their show offerings. So if they can't really stay in the game in terms of exemplary content compared to some of the other streaming areas like Apple and Disney, et cetera, it is possible that this could be the peak. And I think the price is kind of reflecting that as well. And this might be something about the consumer, but it could also be in terms of just the cycles of how companies grow. How much more growth does it have at this point? That's what we're watching for.
Very interesting. Thank you, Michelle, for that. Michelle Schneider following all.